the management of Gravita India. It's a corporate on our show today. It was a steady performance from the company in Q4. The company recorded a healthy growth in revenues and EBITDA, while profits also surged in double digits. Last month, the company enhanced the lead recycling capacity at Mundra by 40,500 million tons per annum to 60,000. Yogesh Malhotra, whole-time director and CEO at Gravita India, joins in now to give us, a view on how the business is shaping up. Yogesh, thanks a lot for joining in. I want to understand this 40,500 MTPA capacity ramp-up that you're looking at. Can you tell us what are the peak utilization levels and what does this mean in terms, once the ramp-up happens in its entirety, what does this mean for a revenue scale-up as well?
So with this capacity now, in addition in capacity, now our total capacity on a consolidated basis, including India business and overseas business, is around 2.5 lakh metric ton per annum. We generally get 8 to 10 times revenue from the capex that we do. So if you look at the overall capacities, I think we are in line to do around 25% growth year on year for the next 3 years, 3 to 4 years. And we would increase the capacities further also from this 2.5 lakh tons per annum. In the next 3 years, we would do capex to improve it to around 4.25 lakh metric ton per annum in the next 3 years.
Okay, so this I assume is a part of your Vision 2027?
Yeah, 2026, 27, yes.
Okay, so what are the other parameters which comprise of Vision 2027? If you have to tell us how much you would probably get in terms of total volumes, how much are you going to generate, say, from the overseas markets, as well as from segments such as value-added products? What is your aim?
So the aim is to grow at around 25% in revenue terms.
Okay, so I think we've lost that connection. But nonetheless, they do have a Vision 2027. If you're just talking about the quarterly highlights, it was 11% volume growth, 12% revenue growth. We have Yogesh back with us. So Yogesh, if you could just apprise us of what numbers we can expect by 2027 for the P&L for the company.
So, as I mentioned earlier also, you can expect a volume growth of 25%. Revenue numbers would change depending on the prices of the commodities that we deal into. But overall, 25% growth rate in volume terms year on year, you can expect from the business going forward. And when I talk about 25% volume growth, it is from the existing businesses that we are into. That is of lead, aluminium, plastic and rubber recycling. But we are also planning to put up new verticals of lithium-ion battery recycling, steel recycling, and paper recycling going forward in the next 3 years.
Okay.
So we would be spending around...
Sure, please go ahead. Please go ahead. You will be spending around?
Around 250 to 300 crore rupees in these new verticals, in addition to the capacity increases in the existing verticals.
And what does this mean in terms of the EBITDA per ton? What is the guidance that you would be putting out for FY24?
So EBITDA per ton would remain around 9 to 10%, which is currently the levels at which we are doing it. But you can expect some upside basically because of economies of scale and because of increase in the contents of value-added products and also some improved efficiencies going forward. But I would like to add on here that because we are operating across geographies in different product lines, and also the models are also different because on one line we are importing some products into India, processing it and then exporting it outside. But at the same time, another model is basically tolling business, which is also increasing a lot. So apart from EBITDA margins, we are also focused on the ROC from any business, whether it is existing or new. And we have our own benchmark of around 25% ROC from these businesses.
Okay, yes. So that's 25% ROC. That's your aim basically from these new verticals. But I just wanted to ask you for some more numbers from these new verticals. If we have to talk about the business contribution from these various verticals in 2027 from your existing as well as your new businesses, how much would it be and what would the blended margins be according to you?
So same blended margins would be around 9 to 10%, as I mentioned earlier. The EBITDA margins would continue to remain in the same lines. You can expect certain increase. And in terms of revenues, if you talk about, as I mentioned, that we will be spending around 250 to 300 crores in the new verticals. So you can expect around 8 times revenue from these verticals. Based on the capex that we spend on. So around 2,000 crore rupees of additional volumes revenue can come from these verticals.
And that is by when?
By 26-27.
By 26-27, 2,000 crores of additional revenues can come in across these verticals. All right.
From new verticals.
Can you from the new verticals? Okay. Can you tell us what is the updated debt on the books? Has it risen in the recent past, and what's the way forward?
So we are very comfortable on the debt position. It's currently at around 350 crores. And we have our internal benchmark of keeping debt equity ratio of 0.75. Currently, it is at around 0.58. Similarly, the debt EBITDA ratio also we have fixed at around 1.5x. Currently, it's at 1.2x. So it's very comfortable position as far as debt is concerned.
Okay, all right, Mr. Malhotra, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that's Gravita India. That stock is up around 7-10%, but they do have a strong guidance by 2027. They do want to get into new verticals. They're targeting a return on capital employed of around 25% from these new business verticals in the next 3 to 4 years. Time for a short break now, but more on the